Hey guys, welcome to another episode of Spilling the Beans. Today I'm sitting down with Scott Baskin. He's a member of Legacy Family, our mastermind, which, side note, if you are interested in a mastermind and a community to be part of, check out Legacy Family. We'd love to have great rock star entrepreneurs, real estate investors, vendors in the real estate space, anything that is entrepreneurial in your world, that where you're looking to scale your business, we'd love to be able to support you. And I think Legacy Family is a phenomenal community for that. So check out legacyfamilymastermind.com, schedule a call with me or Nick and our team, and we'll hop on a call and just see if it's a good fit for you. So anyways, aside from that, sitting down with Scott, who's a local broker. He has a local real estate investment company that flips houses, and he invests actively and passively as an LP and a GP in some multifamily properties in a few states around the Southeast. And so sitting down with him, talking a little bit about his journey. He's been in the business for 20 years, so he's seen some market cycles. I definitely want to ask him some questions about how this market cycle compares to like the 2005 to 2010 market cycle, and if there's similarities, differences, what that looks like, and then kind of how he's gone from brokering to investing to now owning and passively investing as an LP in different syndications. So let's go sit down with Scott. And we'll get some good takeaways. Scott, what's up, buddy?
Hey, Tim.
Welcome
Good to see you.
Welcome to Spilling the Beans, man. We get to hang out twice in 2 days.
Yep.
So, man, well, I appreciate you being on the podcast, and I had a great conversation with you yesterday, and I thought, like, more people need to hear the story, right? More people I want to know a little bit more about your origin story. I know you got the brokerage side, you're flipping houses, you're an LP in a couple hundred apartments, and you got a lot of big ambitions for moving forward too. So let's start out, like, what were you always wanting to be an entrepreneur, and was real estate always the thing, or like how did you get into becoming a real estate investor?
Sure. Thanks for having me. Good to see you again. And we'll go back, I guess, I went to college to be an engineer. I thought I wanted to be an engineer.
Yep.
Born and raised right here in Charleston, so just been right here my whole life. One of the few that are still born and raised here. I think I get that all the time. So luckily to grow up here, and went to college to be an engineer. I got through 3.5 years of mechanical engineering. I was like, I don't want to be an engineer. I don't want to sit there. I don't know. I just had a bad feeling of being an engineer. I was doing fine. I just I don't want to be an engineer. I want to go into business. This was like 03, 04, real estate markets getting really hot. Just talking around with people. I was like, I want to go into business for myself. I'm not going to be an engineer. So I switched majors after 3.5 years, went into finance with an emphasis in real estate. Finished that up, took me an extra year, but when I came out, sat for my real estate license right there in the end of 05. So the beginning of 06, January of 06, I'm licensed as a broker and went to work in real estate. And that's what I wanted to do. So
and you came right back here to Charleston, right?
Yeah, I came right back home. I looked at some other opportunities. I was close to moving to Atlanta to get with a large commercial firm there, but then I got an opportunity here with a small local commercial firm. So I started with in commercial. Just kind of.
I didn't realize you started in commercial.
Yeah.
Were you doing leasing?
I wanted to be in commercial. I didn't really want to be residential. Like, I was comparing the pros and cons, and I was like, I'd rather deal with business people and not the emotions and stuff of residential. So I went in a small local firm that gave me an opportunity, and basically like, here's a desk and a computer, good luck. So threw me out there. Great support. They were
doing
great
investment
folks.
Sales and acquisitions for them, or
anything,
trying to broker or list commercial listings.
Mainly list stuff. I was doing little leases to get by, trying to find big listings on sales, but they were also rebranding as a full service firm at the time. So they're like, you can kind of do whatever you want to do. You can do residential or commercial. We are rebranding to everything, a full service firm. So I've had friends, we're out of college, people are buying their first house. So I kept doing houses on the side, helping them buy their first house while out there running around trying to get commercial stuff. I'd just ride around, look for vacant buildings, call the owner, see if I could list it for sale or for lease, help them with vacant properties, and that's how I got started. And I bought my first piece of property, my first condo, probably 3 months after being licensed in real estate. So this was like March of 06.
Oh, that's great.
The big condo conversion craze was going on, so I found a condo in West Ashley here in Charleston. Jumped on 100% financing, Countrywide Home Loans was giving away money.
Yeah.
I hadn't even made $1 yet. And I remember coming home with a pre-approval and showing my dad. I was like, I'm pre-approved for $350. My dad was like, the heck you are? Like, what are you talking about? And I was like, it says I'm pre-approved. I can buy $350, 100% financing. He's like, you haven't had a closing yet. What do you mean? I was like, I don't know. They said I could, so I'm buying a condo. I convinced him
That's
that it was a good
insane.
idea. So that was house hacking.
Dude,
I didn't know what that
imagine?
meant, but I bought a 3-bedroom condo, got 2 roommates. I showed him a spreadsheet. I ran all the numbers. I said, look here, my mortgage is this. I have 2 guys lined up that'll pay me rent. I'm all out for $150 a month. Own a condo. He's like, okay, I'll support you then.
All
So I
right.
had, I ran the numbers. I'm analytical.
Yeah.
And that worked out. I owned that place for like 10 years. I lived there for like 4 or 5, I guess, and then rented it for another 5. I just sold it a few years ago.
That's awesome, man.
So
No, I think that's, we have a very similar path on how I got started too, because I became a real estate agent out in New York City in the commercial side of things. House hacked my first house as well, had 2 of my buddies living with me.
Yep.
And I think it's a great way to just kind of get going. And I actually was talking with some business buddies, and one guy's a chiropractor, another guy's a doctor, another guy's an engineer, but they all have like their own practices. And I think that's something that everybody needs to be doing on the business side too. If you have your own business, you should be house hacking, right, or office hacking your own office.
Yeah.
Buy an office, rent out the other 4 offices in that office building, and you keep one for yourself. And now all of a sudden you're taking a liability and turning it into an asset.
Sure.
And there's not enough people who are, I don't know, I don't know what the gap is. I don't know what the hindrance is on why people don't do that. But to me, it just makes such common sense, and it gets you in the game. It gets you, you're going to be paying rent somewhere. You're going to be paying office rent and individual rent for your own place. It's like, might as well house hack it and buy and own something. So now you're paying down principal. Now you've got the property appreciation. If you can bring in a couple of roommates or bring in some other businesses in order to rent that, it's a no-brainer to do. And so that's one big takeaway from what you just said. And the other one is, I like, you had mentioned, we talked a little bit about this yesterday, of like pivoting towards business to business as opposed to business to consumer, right? It's a very emotional if you're talking to and working with the individual consumer versus the business consumer. When you start working with a business, it's all dollars and decimals. It's all a math equation. It's all non-emotional, data-driven. Does it work? Does it not work? And it can become more predictable as you build it up. So like one of the pivots that we're making in a big way is we're buying a lot more and underwriting a lot more commercial type properties with either retail tenants, office tenants, but more business to business. So that way it's just more predictable. They stay a longer time. Their rent is actually a business expense, so they don't see it as, I need to jump ship or move around or whatever. And it's easier to work with them because they're too busy making friggin' money. They don't have time to bitch and complain and get on Google and write a bad review about a management company or whatever else. And so, I think looking at business and trying to figure out how can you do more business to business. You kind of got to break into it. It's a little bit different of a conversation, but I think it's an easier world to play in because you're working with bigger dollars and there's a lot less headaches and it's more predictable of a world to work in.
Yeah.
So tell me a little bit about as you're brokering, right? Now you have the brokerage, you got clients on both commercial side and the residential side. What was obviously you had this one condo, but what was the pivot where you started flipping houses and where you started accumulating a rental portfolio?
Sure. I guess first few years, it was growing. That was 6, 7, 8, 09. Took a huge hit, and that was really bad. 09, I got an MBA. Actually, got another job, like a full-time job, for about 3 or 4 years. 3 years with a large consulting firm, great company. It was awesome, but it was wearing a suit, sitting in a cubicle every day, while keeping my license on the side because I knew that's what I wanted to do. But had a really good job, good benefits, and all that. And I didn't know if I'd ever go back to full-time commission because it was hard for a few years there. But I think around 2012, 13 was when I was like, I saw the market really turning and then picking back up, and I was like, I'm going to go back into this full time. I can't stand this job sitting in my cubicle every day, and I'm going to go back in full time, but I'm going to do residential because I think I got a lot more friends buying and selling houses. I'm hearing about flipping at this point, and so I went back in the beginning of 2013, and that New Year's was a pivotal time. We took a trip down. A friend of mine I remember this. This is why I got back into real estate full time. Had a friend that had a private jet, took us down in the Bahamas for New Year's for a week, and he paid for everything, so it was awesome. I didn't have any money to afford that, but I got down there, we're cruising around these islands and seeing these houses. I'm like, I'm never gonna get any of this stuff with my W-2, You know, it's a great job and everything, but I can pretty much map out the next 30 years of my career. You know, here's a 5% raise, here's a 10% raise.
Yeah.
Well, I was like, I'll never have anything like this. And my dream is to do a lot more than what I'm doing right now. So I went back into real estate full time, quit that job
What
right
did
when
he
I got
do?
back.
What did that person do? Was he a real estate guy?
No.
He had a
no.
traditional business?
Yeah, that's a bunch of businesses. Yeah, venture capital guy now.
Yep.
Went in real estate full time, and in the first month back in, you know, I think I had 4 under contract. I never looked back. So that was like January, February of 13, I believe. So
I love
I
it.
just never looked back. Yeah, I got an investor right off the bat. Had
4
another
under
friend.
contract that you were buying to flip?
No, just for a client.
Okay.
So like the market's picking up. I got a client, an investor. He's buying a bunch of rental houses. He was doing some flips and stuff too. So I'm like really getting into it, watching him. I was like, I can do this myself too. So then I think I bought my first flip probably 2014. So I think I've been flipping for about 10 years now, and probably done about 30 flips. You know, I do like one at a time, but I just saw it as a way to make a little extra money. And I had some friends that wanted to invest. So I brought in a buddy. We bought our first flip. He bought it with a traditional, conventional loan. I paid for the renovations. We both put in like all our time, for like 45 days straight. I was there every day doing the work. And so that's what I learned from that one. It was like, after 45 days of doing all the work, learning how to do sheetrock work, doing all the painting, everything, and then we made like $5,000 each.
Yeah.
And I was like, but also my business struggled because I didn't have any time. I didn't focus on my selling business. So for 45 days of doing this, I neglected that. So now I'm months behind, and so I'm not doing that anymore. So that's when I started working on leverage. I got to get contractors in there. I got to get better margins where I don't have to be there. I'm not going to be there hands-on. So, I kind of phased out of that as we went through more and more flips and different partners along the way. After a few years, we got to where it's just my wife and I doing them. We have a partner here and there every once in a while still, but
Is that money partners or operating partners?
money partners.
Yeah.
Yeah, a lot of times.
Because I mean, you
friends.
self-fund all this stuff, right?
Yeah. Yeah, I've had a
For
few
the most
different
part.
friends that would buy it, and then I would renovate it, and we'd split it 50-50 at the end. We had some arrangements there, but it got to the point where I didn't really need that. After years of doing that, then I'm not even going to the property much anymore. It just evolved. Like anything, it evolved. I was like, I'm not actually swinging a hammer anymore. So, but I learned a lot. I learned a ton from that.
And I think you got to go through that phase, because if you don't, then
Yeah.
it's easy to have somebody, just pull the wool over your eyes on like, oh, well, we got to do this and the sheetrock and blah, blah, blah. They're talking about like things that you don't even know on the construction side, which is very easy to kind of talk over somebody's head if you're not familiar with the construction portion. So you got to like get your hands dirty, man. You got to get into the weeds a little bit and understand that, because it's going to make you sharper as you continue to grow and keep the contractors a little bit more honest as well.
Oh, yeah. And valuable experience for my clients now too. Like just knowing the inner workings of a home or a property, and like just, I feel like I bring a ton of value to my clients on the resale side just by knowing.
Yep.
I can look at a house and help them with how to design. Well, you could do this or that, or just knowing a lot more about the house.
Yeah.
So that things evolved through the flipping business, and we keep that going.
What did it look like when the market pivoted? I want to kind of go back to that a little bit.
Yeah.
Do you see any commonalities with today's market and 2008, right? Things were super hot, and then they slowed down, and then things back then, right?
They're
It's
just
the
not
same
giving
thing,
away money like they were.
but they're not giving away money, right?
That's
So
the
how
I
does
tell people, they're not giving away money like they were.
Right.
I was a perfect example of that in 06 when they're just like, here you go, you're pre-approved. I was like, I don't, they're like, how much do you make? I was like, well, I haven't made $1 yet. I just started my new career. They're like, we'll just make something up for you. They told me that. I remember it. I was like, I didn't know.
they're not getting commission if they don't give you any
I didn't
money?
know what I didn't know then. I was like, sure, I'll take it. And somehow I held on to that and never got foreclosed on after about 10 years. But so they're not giving away money anymore. It's hard. I mean, they still scrutinize financials to get money. So I think that's helping a lot.
Yep.
But yeah, Charleston market has really taken off. I mean, it's been going like that for the past 10 years, but and then it even took off even more right during COVID.
Yep.
I mean, that was unbelievable.
Yep.
I mean,
Do you see it slowing down, or do you think it's still going to?
It did a little bit last year when the rates went up, of course. Everybody talks about rates, but I mean, they're not that bad. You can get up 6.5% right now on a primary.
Yeah.
I think that like by fourth quarter of last year really slowed down for our regular resales, retail business. Fourth quarter was pretty bad. Overall, the year was about 25% down from 22. 22 was our record year. I mean, I think we went like that 4 or 5 years in a row, up every year. So 22 is record year for us. 23 came back about 25%. But since the beginning of 24, I mean, the floodgates have kind of opened up again. the buyers are coming off the fence. I think they're realizing we're not going to wait till the rates are down to 4 again. They might not ever get there, so we'll take our 6.5 now, we'll buy the house, and we'll refinance later when they come down. But
Are you
that's
seeing
what I'm
people
hearing.
still financing, or are these cash buyers?
There's a lot of both. There's a lot of cash buyers here.
Yeah.
There's a lot of cash buyers.
There's a lot of people selling stuff in the eastern seaboard, right, from Boston
Ton
all
of
the way down
equity,
to DC.
come down here, yeah.
And then they're cashing out of $1 million of equity, and then they just bring it down here and they just buy something else with cash.
It's a weird
from what I've kind of seen.
Yeah, we're seeing that. We're seeing bidding wars on some properties. I just got like 2 bidding wars last weekend. Like people are bidding 100 grand over again, 60 grand over.
Really?
And getting in bidding wars. But then I've got other stuff that's sitting that's in a great neighborhood. It's like buyers are being a little pickier than ever.
Why are they more selective? More selective about the house, more selective about the neighborhood, more selective about the finishes?
The house, the finishes, yeah, which goes into the flipping too. You have to like do everything. You can't really get away with like the quick little lipstick flips, I call them right now.
Yep.
I mean, I don't know how they can be picky because it's also very low inventory. We're still at like 2 months of inventory across the Tri-County here in the whole MLS. So they're being picky, but I don't know they should be. I mean, so it's kind of a weird time. I'm just seeing some areas taking off. Some areas are sitting for 150 days on the market. We kind of got like little different sections right now. It depends on where the new construction is too. That's a big part of it. The houses that are sitting have new construction all around them. And those guys are offering 2.99%, 3.99%, ridiculous deals right now. The big builders are. So it's
And
hard
so
to
people
compete.
are financing through those big builders?
Yeah. They'll pay for the buy down. I just saw 2.99 this week.
Really?
So that's hard for a regular seller to compete with. But we can offer it too, though. We offer it. We'll buy down your rate if you give us an acceptable offer.
Yeah, you
So
pay us
we
an
have
extra
to-
$50,000 on the house.
we'll just buy it down for
we'll
you.
Buy down
Yeah.
your rate too. Hey, shit, we'll make your first 18 months of payments for you.
Yeah.
If you pay me this premium.
Getting a little more creative again, like for 2020, 21, 22, just you get a listing, it's gone. It's just a matter of, filtering through all the
That's a
offers at
good
that point.
idea.
So now it's like getting creative again.
If you're looking to sell, I haven't even thought about doing that on the sell side. I have a lot of debt that's assumable. It's at low interest rates, and so I'm selling some properties. That and then carrying back a couple of bucks. But being able to tell somebody, hey, listen, I'll cover your first 6 months of payments, so that way you have extra cash flow and this and that and whatever. Or if they're getting new debt, say, hey, go get new debt, and I'll pay for your first, or I'll help you buy down the rate. That's a good thought. I got to give Chris Litzler a call and see what that looks like and what the cost of doing that would be, because that could make sense to get a little bit of a premium on the sale price of a property. And it's a math equation, right? At the end of the day, you just do the math. Hey, it's going to cost you $150,000. Can I charge an extra $200,000? Can I move the property faster? Maybe if I don't make any more money, or if I can break even on whatever that buy down is, can I sell the property sooner and attract a more qualified buyer? That's a good thought. I like that. That's why we have these sit downs.
There you go. Run with that.
Yeah, that's good.
Getting creative these days. I think that's the number one thing. And like for me and my business personally, just adding more and more tools to the tool belt. And it's just like there's so many ways to get creative. Seller financing, subject twos. We're seeing all these things now that I think just experience in the business is helping, so I can provide a lot more options to a seller or buyer.
Yeah, no, man, I agree, and it makes you more valuable in the role that you're in as a consultant, and then it makes you more dangerous in a good way in attacking properties and being able to find better deals and negotiate better deals or negotiate better terms on deals that you're looking to flip or acquire. So you've been in Legacy Family for a little over a year now.
Yeah.
And you've invested in a couple of different, not with me, but with other syndicators as an LP position. What have you learned in that process, right? You're an active guy, and for you to take $100,000 and put it into a deal that pays out a 8 or 10% preferred return versus you taking your money and utilizing it in an active scenario where you know that you can make more money than that on it. What's the thought process behind that? How do you kind of navigate? Well, you're not really comparing apples to apples. You're comparing apples to oranges. And talk me through what your analysis, the engineering brain of yours. What did you kind of go through as you were thinking about investing passively in some of those deals?
Yeah, that's kind of been an evolution as well as find out about other opportunities. And I think it was about 3 years ago when I first started hearing about multifamily, and I think the biggest thing that sold me was the depreciation, the write-off, to offset some of the money we're making in other stuff. So that was the biggest thing to me. I was like, I got some money to invest. So my first dive into multifamily was as an LP out in Texas, like 350 units, completely passive. It's just been fun to watch that, getting the reports. Like the operator does a weekly report analysis, and I just really learned a lot from him. Really good operator. Then the year after that, I had some buddies that are operators as well, and they brought me in as a GP, 145 units in Georgia. So that's kind of like the next step up, I went from completely passive LP, now I'm a GP on the weekly calls, helping make decisions and be a part of that one, and that one's doing really well. So learned even more from that one, and just kind of evolving, So yeah, that just the depreciation is really nice. That was a huge part.
Two things that you just mentioned. One's the depreciation.
Yeah.
The depreciation. Everybody thinks, I need to offer a bigger return to my investor. I need to offer more equity. I need to offer a higher preferred payment. I need to do that. Figuring out what your investors need and what they're looking for, and solving a problem. The same way that you solve a problem with a homeowner who's trying to sell, wants to sell fast, and they inherited a house, and they don't want to deal with the cleanup and the fix up and the carrying costs and all the other nonsense and hiring a realtor. It's like, no, just come in. I'll take a discount. Give me 400 grand instead of 500 grand, and I'll just close in the next 2 weeks. You're solving their problem, and their problem is not always financially driven.
Yeah.
And the key here is it's not always financially driven in order to solve a problem for your investors either, right?
Yep.
I closed a deal at the very end of last year that was a big depreciation play, and we were able to raise $5 million plus based on structuring it with accelerated depreciation and giving people who are in your shoes make a great income from their active real estate operations, and they desperately needed the depreciation to offset that income in 2023. And so we were able to structure a deal where we leaned heavily on that, and we attracted people who essentially said, hey, I'm either going to write a check to the government or I'm going to write a check to this deal, right? And if I write a check to the government, I never see it again. If I write a check to this deal, then I have equity, I have cash flow, and get this money back in the future, and at least I can kick the can down the road, and the government incentivizes you to do that, right? You make the investment because you're going to clean up neighborhoods, you're going to create jobs, you're going to create housing, and they benefit you, and they allow you to kick the can down the road by giving you depreciation. So it's in the tax code as a thing that they try to incentivize, and it's our job to capitalize on those incentives, and to make those additional investments so that way everybody makes more money, right? But now there's more property taxes being paid by the property. Now there's more income taxes being paid by all the employees. All those different things that feed the tax system, where it's not just reducing income tax for the investor, it's creating additional taxes, which is why the tax system incentivizes people. So that's a big one. The second thing that you said, which I think is of paramount importance, is you got into the deals, the returns were good. Yeah, they made sense. But more importantly, you learned a ton.
Oh, yeah.
And it's like, hey, I can go and write a check, but I'm also getting an education. And that education, the return on that investment is infinite, because now you have insights on how they structured their LP position, and their investors and their syndication. Now you have GP interest, where it's building your balance sheet, it's building your experience, and you have additional insights, where now it's going to position you between those two deals, and then what your current portfolio that you own and your current business operations. Now you can go qualify for a multifamily loan or a commercial loan because you've set the tone and made these other investments that were not only good investments, maybe not home runs, maybe not grand slams, but good base hit investments, and more importantly, you got the experience, you got the knowledge, and the resources in order to then go do it yourself. That's a key part of what you said that's super exciting. So what does the next 12, 24 months look like for you? Like, kind of, what are your goals? What are the ambitions? What's the key things you got to implement in order to then hit those goals as well?
Always evolving and learning. So I definitely appreciate all the education I'm learning, from being in those deals, and just from being in the legacy family now for a little over a year. So a lot of value, learning a ton. So I've got some single family rentals now, in the multifamily, just kind of constantly evolving, looking for the next thing. The goals are just to get more of the passive income. Had a baby a year ago. He'll be a year in a few days. He'll be a year old. So last year was also kind of a little different because of that as well. So that was fun, and getting used to that, and even drives me even more. I'm naturally driven as can be, but now with a baby at home, it's driven to get more and more passive and get more passive income so I can be at home more. The leverage, the flexibility, the freedom that everybody talks about. And that's where I'm at now, trying to really multiply where I'm at with the passive income right now.
So I know you're working on the, and really you have we were talking about this yesterday, but you got 3 buckets. So number 1 is your brokerage, and you've got a few people that are on your team, and that's your short-term fast money, where you can pop a closing in 60, 90 days and make a couple of bucks and turn that on as you want. And you can automate that in a way where you can build out the team, and you can come in more as a consultant to your team. You can do a bunch of referrals. Maybe you just say, hey, listen, I don't want to represent every deal or every buyer. Maybe I'm only doing deals that are over $1 million now. So that way the commission dollar amount makes sense. And then I'm just going to refer out everything below that. And so I know that's something that you're working on. And then your second bucket is kind of that midterm money of the flips. And that might take somewhere between 6 to 12 months of in order to come full cycle, buy it, renovate it, put it back on the market, close it, and you get a big pop there as well. So you're always trying to feed that. And then your other one is the long-term holds. And so whether that's as an LP in more of a passive position, or as a GP in more of an active position, or you own it 100% yourself. I know you have a handful that you own, and you have 100% ownership in those. And those are great long-term wealth building plays, and that's the longer money. And so I think a lot of people either focus only on the long money, or they only focus on the short money. And when you're focused only on the long money, a lot of times you're cash poor. When you're focused only on the short money, you might be a cash heavy, but you're equity poor, right? And so in order to have both of those at all times, you got to be doing both at all times. I think everybody needs a short-term business and a long-term wealth building play.
Yeah, definitely focus on all 3, but the leverage, especially for the short term, the faster money, the brokerage, like you said, that's a month or 2, make the quick money, but then it's just a one-time thing and it's gone. And I realized probably about 8 years ago when I started growing a team, it was just me for a couple years, and I got to the point where I could not handle anymore. I remember one day looking at it, I was like, I have 12 houses under contract. I forgot to do, oh my gosh, we forgot to do an inspection on that one. I forgot, I need help. I didn't have an admin or anything, I realized I have to get help. So that's when I started getting leverage. I brought in my first admin, and then bring on a buyer's agent and closing coordinator. So now I've got a team. I feel like we're not a mega team. I'm not looking for a mega team, but I've got a small, really agile team. Just 4 of us right now. We restructured a few people off the team at the end of the year. So I've got a small team, but like you said, that gives me leverage in that, so I can kind of get out of production on the retail side, handpick a few deals here and there, and that's the goal to get there. We've got some really good agents that are in training right now that are going to take over the majority of that business. I've got the flip side for that medium money. I've got great contractors in place now. Now I've got the money in place. Hard money. I realized what hard money was a few years ago, because I would always do one flip at a time, put all my cash into one, make a little bit of money. But now I'm like, with hard money, I can do 2 or 3 at a time, or as many as I can find. So I've got the money, or I've got the contractors, so really going to scale that up, and then use all that to fund more long-term wealth building on that side.
And then the long-term, because of the depreciation, right, now you offset the taxes over here, which allows you now to keep more money to then roll into more deals that you're flipping, or more deals that you're buying and holding. So it's a beautiful, especially being a full-time real estate professional, being able to check that box and taking your active and earned income and your active and earned your passive income, and your active and earned losses and your passive losses, and put it all in the same bucket. It all offsets each other. It's a magical thing, right? And again, it's written in the tax code
to our advantage
to incentivize investment. That's what they want. That's why it's in there. Is because they want to see people reinvesting instead of going and spending that money on something else. They want to see you reinvest because they know it's going to grow the gross domestic product of the United States. It's going to generate more revenue overall. And it's going to generate more taxes overall across the board. Sales taxes, property taxes, income taxes for employees, and all the other things. So that's good. So what I'd like to do is I want to ask you in order to automate the team, in order to scale up the flips, in order to increase the holdings, what is the missing puzzle piece, right? If there's one domino to knock over that'll help knock over all the other dominoes, that'll help solve all the other problems. If there's one problem that we got to attack in order to make 2024 exactly what you want it to be, what would you say is that number one hurdle that you're facing?
I feel like I'm probably just one key hire away. If you look at it from the personnel side, one key person over here could really take a lot more off my plate and help with operations of my main bread and butter, my retail sales. Like I don't want to get rid of that to do the other things. I want to keep all of them going. So like one key hire there that I'll probably be making this year as I transition my other operations person into sales. So now I'm going to need a good operations person over here. So she's still with me now and helping out, but as she transitions, I'm going to need that hire. It's going to be big. That'll be this year.
And so that'll be on the retail team.
Yeah. And with the flips, it's just hard finding good deals right now.
Yeah.
I just need to spend a little more time. But as I get more leverage over here, I can spend more time finding the deals that make sense on the flips.
Yep. We just dropped the tax lien, tax deed one a couple weeks ago on the podcast with the Deed Hunter. So if you didn't watch that one, check that one out. There's still a lot of deals out there.
Yeah.
Just what does it look like, right? Like the other thing is you got to swing the bat, man. I'm on the. Not saying this to you. I'm just saying in general, right? But I know you make offers on everything.
Offers. Yep.
But it's like most people they look at the deal and they don't even make an offer,
Yeah.
right? I shot it out. I'm selling a couple of my apartment buildings in Georgia, and I put out over 400 people inquired on these apartment buildings that I have in Georgia. Guess how many offers I got? Like, I don't even know. Like 6?
Just a few, yeah.
Yeah, I got like 6 offers of 400. That's 1.5% of the people actually made offers. And yeah, a couple of them were lowball offers, and a couple of them were, we went back and forth and we came to terms on it. But you think like, I don't know. Every property I look at, I'm not even looking at it unless I plan on making an offer. And I don't know that I'm going to make an offer on it, but if I'm looking at it, then I'm going to make an offer on it because I'm not going to spend the time unless I'm going to at least make an offer. And I'm going to say, hey, it might not work for you, might not, but is it worth continuing the conversation if I came in, you're asking $6 million, I'd be closer to $4.5 million.
Yeah.
Is it worth continuing the conversation? I'm a very qualified, I'm a very real buyer. Or is there a creative way we can structure this to make it make sense for everybody because of the debt's too expensive, the insurance costs have gone up, and this and that, whatever else. And I'm talking about all those things and trying to get on the same side of the table as the seller, as opposed to just slamming out an offer and slinging a bunch of shit against the wall. I'm trying to actually get on the same side of the table with them, work through it together as opposed to against each other. And I think that's a critical piece that you got to do today, right? A lot of times it's them against me or whatever, and it's not, that doesn't have to be the case. You can actually try to problem solve. Going back to that whole thing of like, try to solve the problem, ask the probing questions.
You don't know their situation. I mean, whether it's just a single house or a big multifamily commercial deal, like you don't know their situation. To ask questions, make the offer, try to get creative. It's not always just the top dollar. I've definitely learned that. It's not always just top dollar what they're looking for.
Not at all.
Like you said, if you close quick or under these terms, or if you can close out here or whatever, there might be something different you can do.
Yep.
Besides just giving them top dollar.
Yep.
So,
yep. And I think that's a critical piece, man. And then the other thing that you mentioned is when I asked you that question is, it was a key hire. And I like that that's typically the thing. It's not usually, I need to figure out, I don't know, the marketing piece that goes out. That's a small domino.
Yeah.
The big domino that knocks down the rest is usually a bigger, it's a more impactful piece, right? And it's usually a who. It's usually, I need to find the person who's going to then automate the operations over here. I need to find the person who's going to be, operations manager of all the flips and make sure that they're doing project management and closing transaction, blah, 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 blah. Or over here, helping me go raise private money, or maybe it's an in-house attorney, or maybe it's whatever. And actually speaking about, if there is a skill set, I would say raising money. Like that's a big, if you learn how to raise money, if somebody doesn't know how to raise money and they learn how to raise money, that opens up the vaults to deals. Because when you start coming out and saying, hey, I have X number of dollars that I need to deploy, guess what? The deals come out of the woodwork. The deals find you, and you don't even have to go hunting for deals. Once you have access to capital, people are like, do I raise money first or do I find the deal first? And I used to say just, do both at all times and try to balance it out. But and then early on I'd say, find the deal and then you'll find the money. That's not always the case. And then I said, you got to be doing both of them all the time. And what I've really realized is if you have money, the deals just find you. The deals come to you. People are slinging deals at you all day, every day. You have to still be asking, but if you're known as somebody who has cash and can close and has the capacity to get a deal done, those deals come to you if you have access to the money. And so being able to raise private money is such a key piece. It doesn't have to be your money, right? It has to be somebody's money, but being able to raise private money and use hard money or private money in order to then transact quickly and solve those problems, you'll get the price discount. Even if the money is a little bit more expensive, it doesn't friggin' matter, man, because it gets the deal done. And you might be able to get a $100,000 discount. Who gives a shit if you're paying a 15% rate? Because you're able to save $100,000 on a deal, it might cost you an extra $10,000 in interest expense, but you got a $90,000 net there, right? And so thinking about it as a global, holistic approach, as opposed to just getting fixated on the interest rate, I think is a limiting factor for a lot of people in buying a house, buying their dream home, buying a property, buying an investment, whatever it is. The rate stuff, that's temporary, right? You can always reposition and refinance in 2 years, 5 years, 10 years, whenever rates come back down. And the reality is 6.5% to me is like free money. If you gave me limitless money at 6.5%, really I would buy the world. I would buy everything. Because to me, that is like
way more than that.
Exactly. I know how to make more than 6.5%. Become more valuable, and that way the interest rate doesn't friggin' matter anymore, right? Because you can figure out ways to increase the value of a property that far outweighs and eclipses whatever that interest rate is. You know? So that's good, man. Well, hey, I'm excited for what the next 12 months looks like for you. If there's anything that I can do to help support, I think, I know we got you connected with Paul Vincent on the fund.
Yeah, that's the next step, next phase I'm going into. I just had that, that idea. I've had it for a while, but I'm going to get with Paul to start that, start a fund myself. I think that's another tool. I've got a lot of friends, contacts that have money they want to invest. So I think that's a strength of mine. I could help raise money, so I'll start my own fund, then I'll have more capital.
Well, and like you got all the right credentials in being able to go out and raise private money, right? Like you've been in real estate for 20 years. Like you have a ton of time experience. Not only do you have time experience, but you've done it at a high volume, right? More so than the part-time realtor or broker who only sells us a handful of deals per year. You're doing it at a high volume for a long amount of time, and you've done it on the investment side. You've flipped over 30 properties for the past decade. You've taken on private money. You've shown that you're a good steward of capital. You've invested into other assets, and you're seen as somebody that that all your friends see you and see the success that you've had, and you haven't gone out and actually like hunted for private money yet, right?
Correct.
But they're watching. They're seeing it, and they don't even know that this is something that you offer. So it's going to be a huge relief to them that like, oh shit, I can put some money with Scott and know that it's backed by real estate. Know that I'm getting a higher return than if it sits in a bank account. Know that I have tax incentives and advantages by the depreciation aspect, assuming it's long-term hold. Knowing that you have equity appreciation and growth and principal pay down and some of those things, and so, or it could just be a higher fixed rate of return on your flips, and then you can combine some of their money over here and some of their money into some of the long-term holds, and they got a great hybrid, and they don't even know. Most people don't even know that exists. Most people think that it's just put my money with a stockbroker, put my money with a mutual fund, put my money with a financial advisor, and that's the only thing that I can do. And dude, that's not a good play. It's not. when you take a look at what happens to your money as the market goes up and down, it actually adversely affects substantially what your returns are. And the S&P 500, for how much it's gone up and down over the past decade or 2 decades, I did an equation. I grabbed all the annual returns of how it's gone up and down, and it equates out. If you just look at the average returns, it averages out to 8%. But what it does to the money, as the money goes up by 10% and then down, or up by 20% and down by 20%, if you got 100 grand in the bank account, it goes up to 120 and goes down 20%. It's not back at 100.
Yeah.
It's at 96, right? Because you were at the 120. 20% is $24,000 and drops back down to 96. And every time it goes back up and down, it adversely affects the dollar amount, which is why these financial advisors don't talk about what does your actual money. They only talk about what the average returns were. But that's a bullshit metric, and it's a smoke and mirrors tactic in order for them to raise more money.
Yeah.
But us, if a 4% fixed rate of return with zero risk to principal of it going up and down beats the S&P.
Yeah.
4% is all you need to offer, and you're offering way more than that, and people just need to know that that's out there.
There's
and
a lot of people that have some money saved up. I mean, it's just sitting in their checking account. They'd love to get into real estate. They want to get in. They don't know how. So I've talked to enough of these folks, friends of mine that just got a little bit. It might not be a huge amount, but they want to get in passively. They'd love to get in and do some flips,
Yep.
or a long-term hold. So
and that's
there's
the
a
key.
big opportunity there.
The key is, 1, making them aware,
Yep.
and 2, educating. People think raising private money is like going out and hunting and knocking on doors. No, it's educating people on what you do and educating people on that there's a better way to invest their money.
Yep.
And if you lead with education, leading with education develops trust. Leading with education develops respect. And those two characteristics are the foundation of influence, right? And then now you have influence in the situation where now they want to invest with you because they trust you, because they respect you, and they know that you're a good steward of capital. So, dude, I'm excited. I'm excited to see how it shakes out. I want to do another one of these podcasts to know about the learning lessons and the curves and the positives and the negatives and all those things as you open up this kind of debt fund or investment fund.
Yeah.
And hear about the process while you go through it. So, but man, I'm excited. You got a big year ahead.
Sounds good. Thank you.
I'm pumped to be part of it. If there's anything that I can do to support you, man,
Yeah.
don't hesitate to reach out.
Appreciate the group and the Legacy family. I mean, this just accelerates my learning so much faster. So
Yeah, man. I mean,
appreciate it.
Well, the beauty of it is like you're gonna go. You're just talking about. You sat down, listened to the Deed Hunter the other day. You're gonna meet him right at the mastermind. You talked to Paul Vincent on the fund. He's gonna be. You're able to meet him at the summit in New Orleans as well, and all these connections. Everybody's already in the room, right? You just need to voice what you need, and then we just need to pair you up with the right resource, and it's all right there. So it's a powerful group. Just any mastermind group is pretty powerful, but I'm super passionate about Legacy Family just because of the quality of the people in the room, not just big business owners, but just good human beings. So it's awesome, man. Well, it's going to be a great year, and I'm excited to see how things shake out.
Yeah, appreciate it.
Hey, hopefully you got some great takeaways from my conversation with Scott. And if you would, it's always great to hear the feedback. So put it in the comment section. What's something that you learned, something that you might have a question about? And I'd love to either create new content or interact with you in any way by communicating with you with any comments or questions that you might have in the comments section of this video. And if you also would, please do me a huge favor. It means a ton if you would just like the video and subscribe to the channel. We've grown substantially over the past couple of years since we've launched this YouTube channel, and continuing to drop content multiple times a week and provide as much value and positive impact as we can to the community of entrepreneurs, people who want to scale their business, people who want to scale their real estate portfolio. If there's ever anything that you want questions answered or things that we can do to create more content and help you specifically in your business, put it in the comment section or shoot me a DM. I'd love to create a video for you specifically. So appreciate you being here. Until next time, be your best.